In this video lesson, I would like to explain one example what happens during the trading. Something that happens to all the traders that trade on the market, any market, for example, in this case, Forex market, crypto market, stock market, or any other markets where you can open buy or sell order. In this example, I will use gold against US dollar on the 4-hour time frame, and I will explain one thing that happens, and that means the example when you are in the trade and your trade is being profitable, coming very close to the take profit level, and then suddenly turns around and go against you and reaches a stop loss level. This means the trade was profitable, being in profit, coming very close to close with the take profit level, and then suddenly reverses and closes with a loss. I think that most of the traders have experienced this way of trading, and it is something that is annoying for the traders, especially when you are in profit for a very large amount of number of pips and then it turns completely against you. I will explain also what is one of the ways how to prevent that from happening, being profitable and then going into loss, completely wiping the whole profit on that trade and closing with a loss on your trading account. Now in this example, I will open one order, which will be, for example, it is a buy order because the price is currently going up. So in this case, I will open buy by the market, and I will open, for example, one standard lot. I will click open buy, and I have currently opened the trade. The trade has been opened at 2315.26 level without the stop loss, without the take profit. In the next step, I will set a stop loss and the take profit levels, and let's define where the take profit level is currently and where is the stop loss level. A stop loss will be just below these wicks here, so I'm expecting that the price will not drop down below 231.44, but I will round this number to 2310. So I'll put here 2310 as a stop loss, and the take profit I could, for example, put here just a little bit above these wicks, but very close to these levels here, right here. So I'm expecting that the price will reach this area, which will be 2323. It will be enough. For example, 2323, and click modify. Now we can see that currently I am expecting that the price will go up here. The price will try to reach this area, go up a little bit, and then it reaches this one here, which is the take profit. So I'm expecting that the price will reach this take profit level instead of going down against me, which means I'm not expecting that the price will go down against me and reach the stop loss level. Usually what happens in this case, in this example, what I'm explaining to you, when the price goes up, it turns around. Sometimes the price can go up a little bit. I will just a minute, I will zoom in a little bit more to show you this one. Okay, here it is. Now in this example, for this can happen, the price could go up a little bit. Let's stretch this here so we have a clean information from the past, so we can compare these levels. Where is the take profit? What happens is usually this one, the price goes a little bit up, then the price reaches this area where these open and close prices are located, so you are in profit. So for example, the take profit level would be $774. So you would, in this example, I would earn $774 if the take profit has been hit, or I could lose 526. So if the price goes in my favor, I will make money. But usually what happens in this example is the price reaches this open and close price. You can see that the price could not in the last 12 hours, because each candle represents 4 hours. In the last 12 hours, the price cannot go above 2317.87. And then the price reaches this price level, so you are expecting that the price will continue to rise in value, because we can see that the price is rising, and there is a high chance that the price reaches this take profit level. But then when the price reaches this area here, just a minute, I will put one line here. Okay, let's put this one as array. Oh, sorry, I made a mistake, not horizontal. I need this trend line. Here it is. the price reaches this area, this price level here, where is the high of these wicks. And then the price, instead of going up, the price stumbles and moves sideways. So you are expecting still that the price could not return back down going below these wicks, because you have a set stop loss just below these wicks, which means the price cannot go down. So after a while, the price starts to move up a little bit up here, and then you expect that the price will reach this area. It will reach the take profit level. But for some reason, something happens on the market, and the market turns around the price. The price starts to move down. Your profit is starting to melt. So the melting profit is stepping in, and you start to fear that you will lose all the money. And the price starts to move down even more, and then the price comes very close to the open price, which means you are currently at the zero without the profit and the loss, because the price is currently at the open price here, which means 2315.26. You're not making money anything, but then suddenly the price starts to move down. The price starts to move very close to the stop loss. So instead of being in profit, for example, here for $600 or $700, you start to lose the money, everything. So this means if the price goes to the open price here to 2315.26, this means you have lost just around $500 or $6. So the profit you had on your trading account has been lost, and you are at zero. So is it a decision to move out or to stay still? Because there is also a potential opportunity that the price will continue to rise in your favor and reach the take profit level. But no, the price starts to move down, and then the price goes down and reaches a stop loss level. You get out with a loss on your trading account instead of being in profit, because you were already in profit for $500 and $600. You did not exit from this trade here at the take profit level because the price did not trigger, but it has come very close to this blue line, which means the price did not reach the take profit level, but it has turned around and gone down all the way to hit your take profit. This is one of the feelings that you will experience for sure on your trading journey, because this is something that happens to all traders. Being in profit where the price goes in your favor and then not reaching, coming very close to your take profit level, and then suddenly turns around and reaches your stop loss level. There is one way that you can prevent this from happening. Instead of being in profit, you could also lock your profits, and that means that you could move easily your stop loss just above the take profit level when the price reaches certain profit. And that means, for example, if the price goes up, for example, to here, to this price level right here, just a little above this open and close, and also these wicks here of these candles, you could easily move the stop loss to the open price. So when the price goes up, and if the price reverses back down, this means that your order will close with a small profit, which will be very close to the open price. So what is the result of this? The result of this is that instead of being in profit and going back down, closing your trade with a loss, you would end up with a small profit in this trade. This means the trade will not be a losing trade, but it would be profitable. Even there is a profit of a few dollars, it is a profit. Being better in a small profit of a few dollars than losing all $512. This is one of the way how to prevent that. Now, instead of using manually moving your stop loss when it is necessary, this means instead of moving your stop loss whenever the price reaches a certain price level, there is another possibility that is using a trailing stop. And trailing stop is this one, a trailing stop where you define how many points you would like. For example, if I put here 50 points, this will mean when the price goes in profit. So this means when the price goes in profit just a little bit above this open price, my stop loss will be moved each time when the price makes a difference from the entry price. So for example, I have put 50 points. So whenever the price reaches Let's put a little bit bigger number so it will be much easier to follow, to explain to you. Take a look here. So I have put 500 points. This means when the price goes, and you can see here that currently I am at the difference 212, 300, 400, 500. So whenever the price changes by 500 points, in this case, my stop loss will follow this change. So when the price reaches 500 points, my stop loss will automatically move to the open price because the difference is 500 points. If the price goes slightly above for 550, my stop loss will be moved again up. So whenever the price goes up, my stop loss moves up for whenever the difference is larger than 500 points. So this means I have a trade that is being tracked automatically by the MetaTrader 4 platform, which means my trading platform will make this change automatically without needing me to manually move this stop loss. So the stop loss will move as your profit moves. So whenever, for example, if the price comes very close to this one, I will be already in profit for small amount of money if the price changes. So my stop loss will be above the open price, which is similar the case as before when I have moved this out mechanically by hand, which means manually. So instead of using your time and being in front of the trading platform, you can use this one automatic, which is called trailing stop. So these are the ways how to prevent from being in profit and then going back down in loss. This is the way how you can prevent that, but this is something that I know is most of the traders. So this is something that is common in the trading world. So for sure you will experience this one. I hope I have explained this case, what happens to the traders. I hope it is clear what happens on the market and also what is one of the ways how to prevent that from happening to you. If you have any questions regarding this scenario, feel free to leave a comment. I will try to answer as soon as possible. And if you like this video, click the like button and subscribe. See you next time and happy trading.